All right. It is my pleasure to introduce the next section of our program, which is our investor panel. So you're about to hear from a panel of investors representing a range of different funds active in the energy space, and they'll discuss the climate for energy and climate tech investments, what is unique about their approach to investment, and what implications they see for the future under the new federal administration. So I would love to invite to the stage our moderator of the day, Jeffrey McDaniel. He is a portfolio executive with Pittsburgh's own Innovation Works. Josh Grehan, who is a partner with Helios Climate Ventures. Lisa Hansmann, who is no stranger to any of you, the director of Foundry Logic. And Poulomi Damany, she's a limited partner with Operator Collective, and John Freer, who is an operating partner with Rose Rock Bridge. So please join the stage.
All right. Can everyone hear me okay? For those of you who've ever wondered what you might be told by a gentleman or a gentlewoman just before you pick up the mic, it's to keep the mic really close to your face so everybody can hear you. I'm hoping that by the time that our panel is over, you won't regret that I'm keeping my mic as close to my face as I am. I'm Jeff McDaniel. I am a portfolio executive at Innovation Works, which is part of the Ben Franklin Technology Partnership of Pennsylvania. It was one of the first of its kind of economic development models in the country. It's now, I think, approaching its 40th year. As Daniel mentioned, innovation is in the name of this week. It obviously is also in the name of the organization that I'm with, which includes not only the group that I'm in, which is focused on early stage investment and technology companies within a 9-county region. Pittsburgh is our headquarters, but we serve the other 8 counties as well. But we also have accelerator programs focusing on life sciences, software, hardware, and robotics. So it's been quite a fun ride for me. I've been in the organization for quite some time. Prior to that, I spent a couple years at Westinghouse. I was an engineer in the Navy a long time ago. So I was a fossil, a little bit of a nuclear, and now an innovator, and glad to be in this space, which encompasses kind of all of those areas and more. So we've got a great panel. My job here is to speak as little as possible. We will have time for some questions at the end. So please prepare those, especially the students in the room. This is a great opportunity for you to ask questions of investors who normally might not be as willing to answer some of them. So put them on the spot. And don't be afraid to follow up with any and all of them afterwards. This is a friendly community. I like to say that Pittsburgh is at the epicenter and this region is at the epicenter of energy. It has been for several hundred years at this point, in one way or another. And you are the next generation of that. So your leadership is going to be extremely important moving forward. I did try to, and part of that encouragement also is that the next Levi Strauss is probably in this room. And I wanted to be respectful, and I was hoping to find that Levi had perhaps a strong woman in his life. Turns out he never married, which was kind of strange. He died. He left his fortune to, I think, some nephews. So I was going to try to come up with a name for Levi's imaginary wife. I cannot believe that he was able to do everything that he did without the strong support of family or friends or close ones around him. So I'm going to go with Lenora. So if you're a Levi or a Lenora that's out there, make sure that you're standing up, asking those questions, and continuing to innovate. I will ask each of the panelists now to introduce themselves briefly. We've got about 2 or 3 minutes for each of us, and then we'll just jump into a Q&A. I have some pointed questions for you, so please be prepared. You don't have to answer them. If there's a third rail issue that you can't or do not choose to talk about, just give me a really nasty look and I'll stop. And I'll pass it to someone else. So I will just suggest that we go in order from my left. And I've been practicing this one name, and so it's the only name that I'm going to try to get right today. Poulomi.
You got it. Spot on. I did coach him and said it rhymes with follow me. That's how you should say it. But I'm so happy to be back at CMU. Spent a number of years here as a student, and really excited to be part of Energy Week. I am part of Operator Collective. We are an early stage B2B venture fund that connects founders to operators. So those are COOs, CXOs, in all sort of the major companies, very tech heavy, but also others. So if you're a startup looking to, get introduced to the CMO of Adobe or the COO at Anthropic or Microsoft, we try to make those connections and help you grow your business. We are, early stage, so pre-seed, seed, and really looking at sort of non-traditional founders, right? So the areas of investment. We're big on analytics, discoverability, compliance, monitoring, that kind of sort of software. Verticalized SaaS, particularly in industries that are benefiting from, Gen AI. And then really looking at sort of security and infrastructure associated with that. So great to be here.
You guys have already heard more than enough from me, so I will move it right on to the left.
Good morning, everyone. Thanks for the opportunity to be here today. Very much appreciated to be in the hallowed walls of Carnegie Mellon. My name is John Freer. I'm a partner with a venture fund or a series of venture funds called Energy Innovation Capital. We're about $350 million in terms of size, about 40 investments, about 33 are still in business since 2016. We're stage agnostic in terms of we have a platform out of Tulsa, Oklahoma called our Rose Rock Bridge, where we do non-dilutive funding and energy-related technologies. We have our $50 million seed and A vehicle called our Rose Rock Fund. We've been very active over recent years out of that fund, completing about 10 investments there. And we have a later stage fund that focuses on early commercialization and an opportunity fund for things in our portfolio that are working well that could use some growth capital. In terms of profile of what we do, what we look for, I would say the things to know about EIC. Most of us on the team are ex-corporate investors. About half comes out of General Electric's venture investing program. Others are from BP, ConocoPhillips, Chevron Technology Ventures, for example. But the mindset is really thinking about how can we help the energy industry advance in this time of energy transition and accelerating need. And so the way that we do that is the way that we used to work in our own corporate identities, where we work with our partners. In our case, we have an LP base that is comprised of folks like Williams, OneOak, Devon Energy, Coterra, Helmerich and Payne. We have innovation relationships with folks like Hess and Pioneer, who now was acquired by Exxon, for example. And so what does that mean, right? Well, what it means in our context is we work closely with the engineering side of the technology sides of these important energy firms, understand what their burning needs are in the energy transition. And then we leverage opportunities that we identify within the venture space to really help them accelerate that transition, both reducing emissions, changing approaches, bringing different energy products to market, and improving their business overall. So the thing I'll close with here in my brief intro is our Rose Rock Bridge non-dilutive vehicle for pre-seed opportunities. We think of it a little bit more as a development studio. Really what we're trying to do is help companies that have a quality idea really get directly connected to our energy company LP base and define that first pilot. In doing that, we find that getting something on the ground is the best way to accelerate and get to product market fit. So just rounding out, I'm a technologist by training, as well as MBA, RPI, Tufts. And I did about 10 years at GE Research, amongst other places. So that's a bit about us. And I look forward to hearing some great opportunities throughout the day that potentially we can collaborate with in different ways and help drive the energy transition. Thanks.
Thank you all for your time. It's a pleasure to be here at CMU's campus and an honor to be on this panel with everybody. I work at Helios Climate Ventures. As the name kind of suggests, we invest in climate technologies, early to mid-stage, Series A, Series B. That's kind of ambiguous. So using a TRL level, I'd say around TRL 7 is probably where we start to invest. Always excited to talk to people before that, see if we can help, are there connections that we can make, ways to be of service. You know, we view climate change as an existential threat. So we want to be as helpful as we can for anybody who's trying to tackle that problem. So please, even if you're like, oh, we're early, I'm still in a lab, I'd love to talk with you, see if there's a way we can be supportive, even if it's not through a funding relationship. General, what I'd say is we're looking to find solutions that are addressing problems that are, if you had a product you could sell tomorrow, there's a market you could sell it in. There's some groups that are more horizon focused. Oh, we're a solution for 10, 15 years down the road. We're looking for innovations that could get out there because a gigaton reduced tomorrow is worth more to us than a gigaton 10 years from now. So I'll pause there. I'll turn it over to Jeff and thank everybody for their time.
Why don't you go ahead and keep going? Because we're going to talk a little bit here about something that Lisa had mentioned earlier about patient money and what it is. So can you talk about what I'm going to go ahead and call as maybe impatient money? So you're looking for companies that are likely to, provide an earlier return. What types of profiles would that company need to have?
So I'll politely push back on what you said in the sense of, I think anybody investing in climate tech needs to be patient, especially because climate change is a physical problem. It needs physical solutions, and building things just takes longer. As Lisa so eloquently pointed to, permitting, construction, securing financing, nothing in climate tech that is hardware focused will scale as fast as software will. It just works differently. So we want to find solutions that can get deployed tomorrow, but we also expect to be with them for years and years. Before I was actually in the biotech industry, I was at a biotech startup, and I spent a long time trying to get a product approved, and that was about a decade-long journey. And I was like, oh, I'll go to climate change because that's a bigger problem. I'm really excited. And it turns out the timelines are about the same. So we're looking for things that can hit the market soon, but we expect to be with them for a while just because of the nature of making stuff is long and hard.
So open question for all of you. When you're looking at companies and their kind of time horizon to get to whatever the proof point is for them so that they can make that impact, what counts as that kind of proof point? If we were talking about a SaaS company, I think the metrics are pretty clear what you're looking for. They're not as clear in a hardware company, a deeper tech company. So what might take the place of, for instance, the metric of a monthly recurring revenue or an annual recurring revenue in some of the companies that you're looking for?
I'll lead off. You're looking for proxies that would tend to indicate that there is a market for the product or service that is being offered at a price that's acceptable. And then you're really trying to think about how do you actually demonstrate that you're moving down a pathway to deliver that. And so in our context, in many cases, a great starting point is if we were doing this as an ICOR model, the customer discovery model, for example, how do we actually work ideally within EIC's partner base for technologies of relevance to us? Let's talk to 5 midstream pipeline companies. Let's understand what their key challenges are on methane emissions, and then what would the product want to be that they would be successful with. Okay, great. Now we've identified what a potential product market fit is. Let's go off and do that. What's the minimum viable product that we could actually demonstrate that characteristic and the core value proposition or technology as applied to that value? So if I've got a customer saying, hey, if this works, I like it, and if I can distill down the core engineering technical risk and then show in that first pilot that we've made some progress on it, that's a pretty good point for us.
And I think this is the challenge, right, in climate tech. And I'm curious for your perspective, having come from the biotech world as well, where for climate tech, for basically each technology and each pathway, we are writing the playbook anew and trying to define those milestones. In biotech, I think the sector is more advanced and uses a set of regulatory signposts to indicate progress as well. But precisely, I think, to the point you're making, for different climate technologies, I think it's about identifying what a customer needs to see in order to be willing to adopt the technology, and then developing a set of financial and legal mechanisms that are aligned with that. And so that, I think, is the first question when engaging with a company. What has your customer told you that they need to see to be willing to execute a unpaid pilot, paid pilot, first commercial deployment? How have you structured your technical de-risking to align with that? And then how do we structure how we provide financing to do that as well? And do we need to shift to models like those that have been used in biotech around tranching rounds and aligning the provision of capital with the retiring of risks in a manner that is aligned to the commercial trajectory? But I think that that's the work ahead, is building those kind of technology and sector specific playbooks around how technical, commercial, and financial milestones layer on top of one another.
My encouragement for anybody who's building or starting a company, things that we're looking for: customer traction. Unpaid pilots are nice, unpaid material transfer agreements are nice, but if you can get a dollar value, even a small one, a few $1,000s, something about it, as an investor, that's just such a nice signpost to see, because that meant somebody out there had to go get budget approval. And that means that they're probably actually going to use your material that you ship to them. If you send it off to them for free, it can sit on a shelf and nobody's going to get yelled at. If somebody had to go and get $10,000 spent to get one of your battery samples in their facility to test, they're probably going to do the testing, because somebody at some point is going to ask, wait, what about that money you spent on that thing? Did you actually do anything with it? So paid pilots, paid testing agreements, and then also a clear pathway to scale. Do you have a techno-economic analysis done? Do you have some costing built out? So I can look and go, okay, if you could find somebody who could buy it, can you make it? And to the extent that you can de-risk or give somebody comfort that you could make it at scale and you can make it affordably, massive, very, very helpful. But Poulomi, I'm curious about you when you're looking.
Yeah, I mean, the biotech analogy is actually very spot on. But I think the main note is, you came up with an idea. It was supposed to solve a problem. Can you prove that you're solving the problem at subscale? And then use that as a way to sort of bridge forward, right? And, whether you can manufacture it, there's going to be lots of issues from sort of pilot, lab to manufacturing. A lot of things might stumble along that way. And I think just having those initial proof points, customer traction, I solved the problem. It's going to remove X out of the X amount of carbon out of the air, and here's how I did it. I think those are all sort of proof points that enable us to continue to invest.
So to continue with that, one of the proof points that had existed, I think, fairly reliably for at least 10, 15 years for a lot of early stage companies is the validation that would come from an SBIR award. Maybe a participation in a project that came out of a university through an STTR program or something similar. There are pockets of companies that we're already seeing right now that are not able to get that validation, or it's a lot less clear whether they're going to be able to be successful in getting that type of validation over the next few years. What advice might you have for them, or perhaps for other proof points? You touched on a couple, I think, industry, those that can also provide a pilot site, a test site, and that type of validation. What type of advice perhaps would you give to both the company and perhaps to your LPs or other stakeholders that you're engaged with?
I'll jump in on this one. First off, I think the role of government funding is massively important, and I encourage everybody here to continue to advocate for supporting innovation grants. There's so many great ideas that are lab proven, but not necessarily ready, or VCs aren't willing to take that risk. And without government capital to step in and play that initial role, I think there's a big problem coming for the innovation pipeline. And I'm glad you touched upon it, Jeff, because I do think it's a big threat. Now, what are other ways that you can get validation? Part of that's the team, right? Can you get people on your team who are experienced, who believe in your vision, who are motivated? If I can see a team that has done it before, has been able to get talented folks to serve as advisors on the board, even better, join the team, that's another great validation that you're on to something. Because if you can get, time is everybody's most precious, commodity. So if you can get somebody willing to spend their time with you, and that person is somebody of exceptional note, it's a great proof point.
I would add, there are a number of great programs, but it's important when you apply to really think about what are you trying to get out of participating in any given program beyond just the small amount of funding or matching funding that might enable. When I think about an SBIR for an early stage team, a lot of it is about really demonstrating that you have the ability to sit down and clearly document and communicate a business concept and a technology concept in a way that has a future, right? There are different ways that one could build or develop that skill set or get that coaching. So, from the company and team development point of view, it's important, but it's not the only way. I'd say the other point, I personally do appreciate programs such as, many of you may be familiar with the ARPA-E funding model. I find that from a technical validation point of view, those programs can be highly effective in identifying high potential ideas. We still have to develop the idea around it, but that's a good place for technical validation, for example.
I would say I'm actually, to be perhaps somewhat provocative here, I'm far less worried about in climate tech in particular, the dry up of the early stage R&D funding, and much more concerned about the coming gap in commercialization funding in particular, because there are a range of incredible catalytic funders who have emerged around the early stage.
I fully agree with you. I'm not arguing.
To counteract what you are saying, it is critically important, but in a world of constrained resources, the huge dollar amounts needed to take a technology from the pilot scale to first commercial are types of support that I think in a really constrained fiscal environment are under threat. And there, it's less obvious to me when we look around the catalytic ecosystem or the investor ecosystem, who it is that is willing to kind of take that risk return profile around a first commercial project. So that's an area where I would advocate for even more public support.
I'd just like to extend, and thank you, Lisa, that's a great point. When you step back and think about the energy ecosystem in our country, it's approximately $2 trillion, I think, when you look at all forms of energy, plus or minus. It's the scale that the energy industry is today in this country is just amazing. And so for us, part of our investment thesis at EIC is how do we leverage that existing scale to help bring new technologies to market in ways where we can leverage that scale to reduce that price tag? And they are willing investors. Some of you may have tracked that recently one of our LP partners, Devon Energy, went in with one of our other LP partners, Helmerich and Payne, who's probably the best directional driller in the country. And they did a $200 million investment in Fervo around geothermal. So these things are working, and companies that are at scale can provide a capital avenue, for example.
Yeah, I'd only say that, you're ultimately selling to CFOs and procurement officers, and that is a zero risk tolerance mentality, right? Which is, I'm going to pay this much money. I expect to, in a year or 2 years, be able to get back that, right? And so that's, to Lisa's point, that's really, really hard to jump when you're, an early stage startup, et cetera. And so I think there's a lot of place for, even in that sort of later commercialization, for public funding for universities, et cetera, to participate.
So have you kind of noticed a change in your own relationships with your LPs and partners over the last several months? That might be a third.
No, I'm happy to talk. I'm always like you, like when the teacher asks a question and everybody said, I'm like, I'm going to talk first. So I can't help but dive in. Yeah, we talk with our LPs regularly, and I'd be lying to you if I said everything was sunshine and lollipops, right? Everybody's nervous out there, right? You got a lot of uncertainty, a lot of change, globally, domestically, and when people are nervous, when things are scared, right? People like to sit at home and stay with their money. And the way I'd suggest is, my former CFO once told me the market has two emotions: greed and fear. And when everybody's greedy, people are throwing money out the window. And when everybody's scared, everybody's holding it close. And we are very much in a fear mindset. So we're having to talk to our LPs, understand their concerns, listen to them because they're very valid, but also identify what are areas that feel less threatening, less scary, and try and focus our time and effort there, right? I think where in 2021, everybody was swinging for the fences and looking for home runs, and now everybody's going, I don't know, man. I think maybe singles and doubles win ball games. So adjusting how you play and how you communicate.
I would say simply with our investor base, we've always tried to be pragmatic about moving towards cleaner energy. We certainly do our share of climate investing, but usually it's more incremental. And so for us, I think the current climate is actually reasonably attractive. I think some of the folks that were part of the 2021 let's just say frenzy of investing, perhaps if some of that capital was able to be returned, that could be redeployed.
John, you went almost exactly where I was going, which is I think there's actually a real opportunity right now in the market, in that the market's response to a nebulous supposed policy shift in climate has led to a significant overcorrection, I think, in certain aspects of energy in particular. So, for instance, if you look at stock price movements around the now relatively dramatic Biden-Trump debate back in July, and then in October, when public sentiment started shifting towards Trump, you see just huge declines in stocks that even just have the word environmental in the name, even if services have actually nothing to do with ESG, environment, what have you. And so this isn't a rational response in all cases. And I think it's really clear that there are technologies and sectors where we know, in particular ones that are adjacent to and relatively agnostic to the shape and speed of the energy transition, that demand alone is creating a long-term investment opportunity. And so I think if you are capable of, or if you have, the fund timeline that allows you to kind of arbitrage that, there's a real opportunity to provide the capital support that those companies need at relatively good value.
I think we probably all are kind of navigating a change in language. So that's an excellent point. For example, and I think our space and many in the room are kind of recognizing that. Just a few months ago, what we were doing was decarbonization. And now it's industrial energy efficiency. And I still have to keep looking down to remember what that is. But I think ultimately it means more or less the same thing, or that it hasn't really
Carbon
changed.
to value. Carbon to value.
Exactly. I have to write that one down too. So before we kind of move to the audience, just maybe a couple things. One is that we haven't talked about perhaps the other elephant in the room, which is I think a friendly elephant for us, is AI. What role does it play within our space? I think a lot of people kind of presume that that's a software thing. And we're over here in a clean tech or a kind of an energy space or whatever it is, and that there really isn't a relationship between them. But I believe that we all believe that there is. So, Josh, perhaps you could give us a few of your thoughts on AI and its role.
Well, I had a lot to say, but Lisa said it so well earlier, so I'm just going to sound mostly repetitive. But I will say there's a lot of concern about energy supply for data centers, AI, and while I'm sure there's going to be an increase for demand, I think some of the histrionics that get put out there in the forecasts are a little unhinged from reality. And also, I'm a student of history. It's part of what I got my master's in, and I like to look back at the past. And if we looked at the early birth of the internet, late 1990s, 2000, the internet could consume 50 to 60% of all electricity. Turns out it didn't. Why? Because we got more efficient. And I think the same thing's going to happen with data centers. I'm sure there's going to be an increase. There's going to be a build out. But the doom forecasting about how much demand is going to occur, I think, as Lisa noted, there's going to be physical constraints. The grid, gas turbines, transformers that are going to slow build out. Things are going to get more energy efficient. Compute's going to get better. Things like DeepSeek will happen. Blackwell NVIDIA chips. We're going to just learn how to do more with less. And then also, I do think there's some broader questions on what the ultimate demand will be. I think adoption of technologies often takes longer than people expect. So I think AI is important. I think there's a lot that we can do. We have to pay attention. I think we need to invest in the grid, but I don't think it's going to break and I think Lisa had a great rainbow graph of all the other use cases that will increase energy demand. So we need to invest in it.
Yeah, I mean, the math, is all of computing, right? Data centers, networking, apps is 5% of energy usage, right? And data centers is about 1%. AI consuming data center power is about 0.1%. So even if it was to grow 5x, you're looking at 0.5%. So it's not going to be dramatically sort of consuming a lot of energy. What it does do is give that impetus about, should we do nuclear? Should we start thinking about projects that are closer to where we need AI capacity? And the other thing is just the AI impact on traditional industries, transportation, manufacturing, et cetera. So I was just hearing this podcast about a company, Vistrion, redesigned their production lines to reduce the energy and improve efficiency of their sort of production. And they were able to take 60,000 tons of carbon out of the air. So that's just one factory. Imagine doing that, 1,000 times. Or if you were to use AI to rebalance, power systems balance every 4 seconds. What if you could predict down to the neighborhood level what your future consumption is going to be an hour from now, 10 hours from now? Be able to pull in sort of rooftop solar or wind or any sort of alternative energy and buy that earlier. So now you're sort of getting more efficiency using AI. So the AI impact on traditional processes and other industries that consume a lot more power, I think that's where I'm sort of interested in. And I think that's where I think there's the promise of AI as opposed to the consumption of AI.
For Energy Innovation Capital, AI is just a fantastic opportunity on so many levels. We've invested in a company called Crux OCM. Crux has an AI-based platform that enables optimization of energy flows, meaning hydrocarbon energy flows through Williams and One Oaks pipelines in a way that gives them either more capacity or reduced energy usage to move those energy products. Company is fantastic, and we love where it's going. It's a great opportunity. The first company that came through our Rose Rock Bridge pre-seed vehicle, it's called Safety Radar. So that uses LLMs to ingest all of the safety data from large energy companies, reducing workplace injuries. So hey, we're all in. AI is a national competitiveness issue, and we need to make sure that we leverage the great energy resources we have in this country responsibly to be able to support that opportunity. The closing point I'll leave you all to consider with this is, there's always different ways to solve the problem, and developers are really crafty with how they do things, right? So at the end of the day, for things like AI training, you don't necessarily need to have the AI data center directly adjacent to where the demand center is, right? So I don't know if my math is 100% correct, but the last time I did the back of the napkin, something like a 10 gigabit fiber connection could bring the compute equivalent of around 12 megawatts worth of energy. So if I can put a data center and a gas turbine plant, ideally an oxy-combustion plant that has high carbon capture, if I can put that in West Texas with effectively lower zero-cost natural gas, and then just run the fiber optic cable, that doesn't sound like a bad way to blunt some of the curve on the challenges that Lisa showed earlier. So I think there's just a ton of opportunity, and the creativity that our country is going to show is going to really shine in the coming days.
Great, thank you. I think we have some time for questions. Levi, Lenora.
Any questions from a student in the room?
Yeah, thank you so much for the panel. I really enjoyed it. My name is Tashank. I'm a energy student here at CMU. Given all the different things that all of you have said, are there any specific areas that you guys are really excited about for this year and are looking into? Thank you.
So really looking at valuing projects, right? So whether it's carbon removal or how do you sort of make that available? There's a $40 per ton clearing price. How do you make that available in a objective fashion? I think, discoverability, monitoring, compliance, just being able to understand what your footprint is. There's it's regional right now, California, et cetera, have certain credits as well as laws saying, measure your footprint. And so those become buying centers. So we're looking at those as well. Those are immediate ways to commercialize.
So I talked a lot about grid enhancing technologies, which super interested in, but one technology more in the hard tech and manufacturing space is high temperature superconducting tape. I think this is going to be a critical input into effectively all of the next generation technology sectors that will emerge over the next 10 to 20 years. It's an area from advanced conductors for the grid, power electronics, to defense applications. And this is an area where today, effectively all manufacturing capacity exists outside of the US. There's one startup, Medox, that is working on manufacturing HTS tape here. But this is an area where I think there will be significant demand in the future, demand across sectors, and where capacity right now is really fledgling. So super interested in solutions around that space as well.
I'll go a little bit shorter term because, in times of volatility, sometimes there's discontinuities in the market, and those create let's just say business opportunities. Lisa alluded to this earlier or said it directly around the challenges with getting transformers if you want to site a substation or a data center or something on the medium voltage to low voltage distribution grid. You might have to wait 24 to 36 months just to get a transformer to be able to put in whatever the project is that you want to do, right? So this is creating an opportunity for some of the previously more challenged solid-state transformer, silicon carbide, gallium nitride, semiconductor approaches to solving the same challenges that a transformer currently does in the traditional sense, but with greater flexibility that can have knock-on benefits to the grid in the future. So that's an example of something right now where I think I'm seeing some renewed green shoots because of the opportunity created by that discontinuity.
I'll name three broad areas. Critical minerals, just because of the concerns around supply chains, domestic manufacturing, and the future technologies and their needs. The grid, that's a big old bucket, but there's a lot in there that we could unpack and that has been discussed. Like solid-state transformers, which is a upcoming investment we will be making because of all the reasons that you spoke to. And then efficiency, and again, that's very broad, but the reason behind it being there's never been a desire to pay a green premium. there's even less, and there's a lack of belief that there will be government support to overcome that. And if you have a product that is more efficient, you in theory might have a product that can cost less. And I think that's incredibly important. And efficiency can happen in a lot of variety of areas and ways. So those are three big areas or themes that I would say I'm spending a lot of time in.
Awesome.
I've read that a lot of big tech companies like Meta, Microsoft are looking at investing in their own nuclear or building their own nuclear plants, taking their energy future into their own hands. Do you see that as a continuing trend with a lot of big tech companies?
I think it's mostly because AI in particular needs sustained, uninterrupted power. And so it's sort of a short-term solution. I don't see Google or Meta going into the manufacturing of nuclear plants. I think they're doing it as a short-term gap. I think eventually it's going to move into, when you have a sustainable grid infrastructure, it'll go there. I mean, people used to have their own data centers, and then we went in the cloud, and everybody's in the cloud now, right? It's the same concept.
I will say to the conversation we were having earlier about the promises and perils of AI, this is an area where I'm concerned that, again, we are seeing an overcorrection in the early stage relative to the hyperscalers' response, in that I think we need to be very clear-eyed that hyperscalers are not our saviors when it comes to deploying energy technologies. They may be an early adopter. We will see. I will say it's much easier to announce an offtake agreement than to actually finance the construction of a project, which we have yet to see in the nuclear space. But I also think we need to remember that that for most of these technologies, the full market opportunity is actually in the $2 trillion large-scale energy ecosystem that John was talking about. And so it is fine to think about hyperscalers as a first step, but your commercialization trajectory needs to have an eye towards that broader impact as well.
I would simply say, just given a small amount of insight from our Rose Rock Bridge vehicle, Microsoft actually has a director as part of that participates on our board and makes great contributions. I would simply say, from my perception, is Microsoft's commitment to their net zero commitments is very strong, and so it's not a surprise that they've made the moves that they've made, and I would expect them to continue to do so.
We have time for one last question, and it's Chris Gassman here with his hand up.
There we go. All right. So I'm going to try and thread together a few things that each of you have mentioned. Curious about, from the utilities perspective, have you seen any utilities that have been able to thread that needle of the investor perspective and whether they want the aggressive ROI or the more long-term? They're operating in the regulatory context that they have, or they're changing the regulatory context that they have. They're building a new business model. What are examples of utilities that are working with investors and finding ways that work?
I can give one example. I think it's more about, again, to this question of, given that utilities have yet to shift how they're operating, which businesses have been successful in operating within that existing incentive structure. And one area where I think we've seen progress is on leveraging utilities' focus on reliability as a channel for technology deployment. So one of the few areas where we've actually seen the deployment of advanced conductors, that is transmission wires that can transmit more capacity through the same footprint, has been in California, actually around areas that have been affected by wildfires, because there's a view that advanced conductors are more resilient. So even though, I think for all of us, the primary value of grid enhancing technologies is around the cost-effective efficiency gains and capacity increases, they managed to go to market in that particular jurisdiction because of a reliability argument instead. And so I think this gets to our conversation around understanding your customers' needs and organizing your commercial offering accordingly?
So I'm going to take the moderator's prerogative, ask one last question. Although many of you, I think, have ties to Pittsburgh, you also bring a view from the places that you are or have been. We have a pretty vibrant energy ecosystem here. We get some things right. I think we can work on some other things. Are there other areas, other regions in the country where you see things that are happening or could be happening and that we perhaps could be bringing back to our own region?
So as I mentioned, biotech background. And if you're a biotech in the States, I'll bet you 9 times out of 10 that you're probably in Cambridge or Somerville or Boston. That's the Mecca. And there's a reason why, because they got kind of what I call the holy trinity for biotech. They got a lot of smart people, because there's a lot of universities, like in hospitals. They got research hospitals. So you got smart people in universities. You got hospitals that they can do studies with, and they got a lot of money, like biotech funding back at VCs that know how to operate in that context. So you got people, institutions, and the cash needed to bring those all together. And I really think that's what Boston does really well. And Massachusetts has built a whole ecosystem around it. They've got state organizations to support that. The industry is organized to advocate for themselves, to ensure grants, programs, incentives, protections. So I think if you're looking for how to build a regional model, as you talked about, like how can we be the Silicon Valley for energy, Massachusetts and what they do with biotech is a great place to do some research.
Yeah, obviously Silicon Valley for general tech. But one interesting thing I've been watching is Texas, believe it or not, pointing to some of the things that Lisa mentioned, which is reducing the number of steps it takes to get permits. You know, there's obviously the university connection. It's a deregulated utility. So there's always a need for that. So I think there's something happening in Texas that I think could be replicated here as well.
Well, great. I will extend the first thank you to our panel. I believe you'll get a chance to be on the other side and up here while some of us are down there this afternoon. But thank you so much for your participation today, and thank you very much for all of your participation today. It's been very enlightening. Appreciate it.